Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 19th of September, 2007, and the market's closed. Not only did the market hold on to yesterday's gains, but it actually added a little bit. The S&P 500 finished with a closing gain of 86 cents, or just about 0.5%. And you can see the open and close were about the same. It closed just a little bit below the open. And looking into today's action on a 1-minute time frame, you can see that a gapped higher, held the daily VWAP for a while, then had a nice little thrust higher here at about 10:45, but that failed, and then it broke below the daily VWAP, and that VWAP acted as resistance on these subsequent drives lower. So we had a couple of drives lower in there. The market attempted to recover in here, but then late in the day, the sellers did take back control. So the average price that the spiders traded at today was about 153.60. So basically, there was a little bit of distribution that went on today on the 1-minute time frame. But when you look at the 10-minute time frame or 5-minute time frame, there was absolutely nothing bearish about this. In fact, let's take a look at some Fibonacci levels just to see from the lows before the Fed meeting to today's high. We haven't even seen a 38.2% retracement yet. So the market continues to hold on very well. And on this daily time frame, you can see we're up near these closing highs, which are actually all-time highs as well. So the market is acting real strong in here, and I expect that maybe we're going to get a little bit of a pullback over the coming days or so, but I don't expect it to be very deep of a pullback. In fact, I had been mentioning that maybe the 150 level would be where we find support. I think a pullback to 150 is possible, but it's pretty far away. So this market has a lot of room underneath it to pull back and still be considered a healthy pullback. I don't think you don't want to chase the market here, but there's a lot of great looking stocks out there. So just continue to manage your risk in the individual stocks, and I think you'll be fine. Let's take a look at the semiconductors. Semiconductors broke past the resistance yesterday at 37.40. That will continue to be an important level going forward. You can see here that on the 1-minute time frame, the sellers did gain control of this one late in the day, and then that VWAP did act as resistance late, right as this attempted rally failed. We had a little bit of volume coming at the end of the day. Don't want to read too much into that. This market, again, isn't quite as strong as the other markets. If you take the Fibonacci off this level and back out that what looks like a erroneous trade, it did pull back about 38%. So already we're seeing that the semiconductors are still weaker overall, but they're showing a little bit of signs of stability. We've got a rising 5-day moving average. That's good to see. Just continue to monitor that 37.40 level, holding above there, and I think that this market will maybe be in for more of a consolidative phase than anything. But it is interesting to notice it came right up to that 50-day moving average, and that's where it's holding for now. So the IWM was the strongest group yesterday, and once again today as well. We finished here with a gain of 1.3%. It added $1.07 to yesterday's rally, and putting a lot of room between the $80 level where that 200-day moving average is and current closing prices. So that makes things look a lot better, particularly when you look at this weekly time frame. The fact that this prior support area has been taken out, and if it can continue to hold up above 80 over the next week or so, then I think this market is going to continue to heal itself and perhaps go on to challenge those old highs up there. So the let's look at the intraday action. Real strong uptrend here. Clearly, it's an extended market. I wouldn't be surprised to see some weakness over the next few sessions that tests that $80 level, and hopefully it does continue to hold up above that level because it had been so important. You know, then the more times resistance is tested, the more likely it is to break out as the seller's resolve diminishes in that area. So this 80 level will be very important going forward as far as a potential support level for the IWM. The NASDAQ 100, apparently they're telling me these were real trades here. I don't know who would have been dumb enough to pay $52.75 yesterday, but I guess somebody did. So they're not going to clean that data up is the way I understand it. And you know, here again, we've got a very strong looking market in the NASDAQ 100. It has a red candle because the close was below the open today. And we only saw a gain of what is that, about 1/4% or 13 cents in the NASDAQ 100. But looking at a 10-minute time frame, you can see there's that that trend. Let me just fix the scaling so we don't have to see that bad data in there, or what I think is bad data, and what they're saying is actually good. But if we take the Fibonacci off here, you can see, again, not even a 38.2% retracement yet, indicating a very strong market holding on to these gains. And I think that you can thank a lot of short sellers for that, because they were in there maybe admitting they're wrong, bidding for stocks, and you know, the sellers don't have any control in this market. On the 1-minute time frame, they did gain a little bit of control today, but that's not enough to impact it on even a 10-minute time frame, where, again, the most important level going forward for this market to hold is going to be around $49.40. That's still a long way down from here. So the market acts good. I think that you want to be basically trading stocks to the long side, and just always managing risk.